Good afternoon, everyone, and welcome to today's webinar, How Inflation-Proof is Your Retirement? I'm your host, John Poley. Every month, we bring you insights directly inspired by the questions and interests of our clients. As registered attendees, you'll receive a link to the full webinar recording and a quick survey afterward. Your feedback guides us at the United States Gold Bureau in selecting the topics that matter the most to you. Joining me today is Joshua Hoy, one of our outstanding product managers and someone who has a real knack for making these complex topics clear and actionable. Josh, it's great to have you here.
All right, thank you for that introduction, John. Now, if you're like most people that I've talked to, you're worried about what inflation means for your future. Rising costs, increasing pressure on retirement savings, and uncertainty in the markets. It's enough to make anyone wonder, is my financial strategy strong enough? That's why we're here to help.
But first, Joshua, please introduce the U.S. Gold Bureau, and then we'll go over today's format.
All right. The United States Gold Bureau is the largest authorized numismatic bulk purchaser of U.S. mint products in the country, and we work with some of the more reputable refineries and mints across the globe. Now, as such, we can guarantee the authenticity, purity, and quality of every product that we offer. Now, we're an authorized dealer of NGC and PCGS. And the United States Gold Bureau's parent company, Lone Star Tangible Assets, was awarded full state compliance and oversight on the Texas Bullion Depository. The Texas Bullion Depository is the first and only state-administered precious metal storage facility in the country. And since 2003, we've been able to help protect over $2 billion worth of assets.
That's a lot.
We're doing well.
Just a quick note for everyone tuning in. While we'll cover a range of financial strategies today, we're not tax professionals. So for any tax-specific related questions, we recommend speaking with a qualified tax advisor. First, we'll address a question that came in during last month's webinar. Then we'll look over some of the ways inflation is making retirement more difficult than ever. This month, we're tackling one of your top questions. How much precious metals should you own? It's a great topic, especially with so many uncertainties in today's market. To help answer it, we're drawing insight from three legendary investors who made their mark in traditional markets, but also see value in gold. Jeffrey Gundlach, Paul Tudor Jones, and David Einhorn.
That's right, John. Now, these experts built their reputations in areas like bonds, equities, and macro investing. Fields where productivity and cash flow are king. But they recognize the unique role that precious metals play in protecting wealth. Now let's start with Jeffrey Gundlach, CEO of Double Line Capital and the Bond King. Now Gundlach is an expert in fixed income investments, yet he holds gold as a critical hedge against monetary policy risks. His focus is on stability, and he's noted, I'm certainly long on gold. It seems almost inevitable that gold is going to break to new highs. For Gundlach, it's about protecting wealth from central bank missteps, like evasive rate cuts or currency debasement, where risks bonds alone can't fully guard against.
Thanks, Josh. Paul Tudor Jones, founder of Tudor Investment Corporation, has a similar outlook. Known for his sharp insight into macro trends, Jones has warned us about the dangers of unchecked government spending and rising debt. He emphasized that this path could lead to inflation that eats away at wealth. As he said, we're going to be broke really quickly unless we get serious about dealing with our spending issues. For Jones, precious metals like gold aren't just an option. They're a necessity, safeguarding in a world where fiscal policies create more risks than solutions.
Now, building on that, let's talk about David Einhorn, the founder of Greenlight Capital. Now, Einhorn is a legendary investor, especially when it comes to spotting long-term risks in the market. He's been vocal about the dangers of loose fiscal and monetary policies, warning that these could lead to inflation and erode the value of traditional assets. In fact, he's made it clear that gold is a cornerstone of his portfolio. And as he's put it, gold is a large position. We own a lot more than just the GLD. We own physical bars. So for Einhorn, holding gold isn't about speculation. It's about protection against the systematic risks that can blindside unprepared investors. And that's exactly why this conversation matters. Investors like these don't see gold as just another asset. They see it as an essential protection against the kinds of risks that can catch many people off guard.
But Josh, these guys deal with a lot of money, and they've been doing it for a very long time. For a new investor or people that can't afford dramatic volatility, how much should they start with?
Well, that's a thoughtful question, and it really gets to the heart of prudent investing, especially for those who are newer or more risk averse. Now, while every investor's situation is unique, a sound guideline for those seeking stability, especially as they approach or are in retirement, is to consider 10 to 15% allocation of their portfolio in precious metals. Why that range? It strikes a balance between hedging against inflation and market volatility while keeping the bulk of your portfolio in other conservative investments. For those particularly sensitive to risk or just starting out, it's perfectly fine to start on the lower end of that range or even begin with a smaller allocation to build confidence. The key is gradual action, not overexposing yourself, but still positioning your wealth for long-term security. The beauty of metals like gold and silver is that they don't behave like stocks and bonds. Their historical stability makes them ideal for those who can't afford dramatic swings in their portfolio. Remember, the goal isn't to speculate. It's to create a foundation that protects your wealth, especially when the markets get choppy. For new investors, this approach offers a peace of mind and a practical entry point into the world of precious metals prior to or during retirement.
Josh, speaking of retirement, that brings us to the heart of today's webinar. How inflation-proof is your retirement? We're going to explore how inflation and other factors could erode your wealth, and more importantly, how tangible assets like precious metals can help protect it. Whether you're new to investing or you've been in the game a long time, understanding how to safeguard your wealth from inflation is critical. Now, to really set the stage, let's take a look at how inflation has impacted the cost of everyday essentials over time. For example, the cost of goods and services doubles roughly every 20 years, and that's just at a 3.5% annual inflation. Imagine retiring with what feels like enough money, only to find out 15 years down the road that your savings don't stretch far enough. That's the challenge we're tackling today. Josh, what could $100 of groceries buy in the year 2000 compared to today? And why is that so critical for retirement planning?
Well, thanks, Sean, and that's a perfect way to frame the issue. So let's put this into perspective. Back in 2000, $100 worth of groceries would cost about $183.31 today. That's an 83% increase over 2 decades, nearly double. Now, think about that for a moment. You're paying significantly more for the same items. This isn't just an abstract number. It's the price of feeding your family, maintaining your lifestyle, and securing your peace of mind. What we're witnessing is how inflation quietly chips away at purchasing power. Now, it doesn't feel like a big deal year to year, but over time, the cumulative effect is staggering. And here's the kicker. It's not just groceries. It's healthcare, housing, education, and energy. Everything we rely on becomes more expensive, and that erodes the value of every dollar you earn or save. Now, here's where precious metals come in. Gold and silver have a unique advantage. They've historically preserved value even in the face of high inflation and economic uncertainty. Now, while cash loses purchasing power as prices rise, metals tend to move in the opposite direction. They act as a store of value, a financial anchor, if you'd say, that holds steady when everything else feels unstable.
That's such an important point, Josh. It's way beyond just groceries.
Yeah.
It impacts every aspect of our daily lives, including the cost of energy. Let's take a look at a chart which compares inflation rates to the rising cost of energy over time. This will help us understand how these trends directly affect your financial stability, especially in retirement. Josh, what are we seeing here?
Well, thanks, Sean. What this chart shows is that while energy costs like electricity have generally kept pace with inflation, they've done so with much less volatility. Unlike the sharp, unpredictable swings we often see in other areas of the economy, energy prices have moved in a more steady and predictable pattern over time. For retirees, this is important because it highlights how inflation impacts every part of your budget, even the essentials you rely on day to day. And this is where precious metals come into the conversation. They're not tied to any one sector like energy, but instead they move in response to broader inflationary trends. This makes them a valuable tool for balancing the cost of both volatile and stable necessities over the long haul.
That's a great insight, Josh. While energy costs like electricity have moved steadily with inflation, we know that not all energy-related expenses behave exactly in the same way. Let's shift our focus to the next chart, which includes gasoline prices alongside inflation and electricity. Gasoline is often thought of as more volatile, but looking at the data here, it seems like it's followed a relatively stable upward trend. Josh, what can we take away from this?
That's a great observation, John. This chart shows that while gasoline prices have seen some fluctuations, they haven't been as volatile as many people might expect when viewed over the long term. Gasoline, much like electricity, has generally kept pace with inflation, though with slightly more noticeable peaks and dips driven by short-term factors like geopolitical events or supply disruptions. The takeaway here is that while essentials like gas and electricity tend to align with inflation, they still eat into your purchasing power over time. Precious metals come into play because they're not tied to the pricing dynamics of any one single expense. Instead, they serve as a broader hedge against inflation as a whole, helping to protect your wealth no matter how specific costs like gas trend over the years. That's the kind of diversification that's critical in retirement planning.
Now that we've looked at inflation's impact on essentials like energy, let's turn our attention to healthcare, a cost that's rising just as fast, if not faster, for retirees. We all know healthcare expenses have been climbing steadily, and retirees are feeling it more than anyone. From premiums to out-of-pocket costs, and especially prescription drugs, these increases are eating away at retirement savings. Josh, let's talk about these things, these rising costs, and of how they affect retirees and such a critical part of planning for the future.
Yeah, absolutely, John. Healthcare costs are one of the most significant challenges retirees face, and they've been increasing year after year. In fact, the average couple retiring today is expected to spend nearly $315,000 on healthcare expenses throughout retirement, and that doesn't even include the cost of long-term care. The rising costs aren't limited to premiums. They also include skyrocketing prescription drug prices, copays, and other out-of-pocket expenses. What makes it even tougher is that healthcare is a necessity, not something you can choose to cut back on. That's why it's so important for retirees to understand the financial impact of these rising costs and take steps to protect their wealth. It's not just about covering today's expenses. It's about planning for 20, 30, or even more years down the line.
We've talked about the rising cost of healthcare, but there's another layer to this challenge. How your income directly affects not only your healthcare cost, but also your eligibility for critical programs like Medicaid or the taxation of your Social Security benefits. The screen outlines some key examples of how income triggers can have unexpected consequences. These include disqualifying someone from Medicaid or increasing Medicare premiums based on income levels. It's clear that understanding these rules is essential for protecting your retirement savings. Josh, when we look at these income and healthcare interactions, what stands out to you as the biggest challenge retirees need to navigate?
Well, what really stands out is how small income changes can have an outsized impact on a retiree's financial situation. For example, exceeding Medicaid's income threshold by just a few dollars could disqualify someone from benefits for an entire year. Or consider Social Security. While cost of living adjustments are designed to keep up with inflation, they often fall short, and the taxation of benefits adds another layer of strain on retirees. The bigger picture here is that retirement planning isn't just about saving enough. It's about managing your income in a way that minimizes these kinds of penalties and maximizes your access of benefits. This is where strategy becomes critical.
We've covered some of the challenges retirees face with rising healthcare costs and income triggers, but let's shift gears to something that offers a solution to these uncertainties. The U.S. Gold Bureau's buyback program.
All right.
Josh, can you walk us through how the buyback program works and why it's so valuable for investors looking to protect and maximize their wealth?
Well, the United States Gold Bureau has the 100% buyback guarantee. Now, if you do business with us, we'll do business with you. Bullion can be liquidated at market value anytime, and for qualifying investment grade held over 5 years, our consignment program is a great option, though you can always opt for an immediate bid price in emergencies.
Now, I'd like to point out at the usgoldbureau.com, we have more information on this exclusive program for our clients. Thank you, Josh, for sharing such valuable insight today.
No problem.
And thank you to everyone who joined us. We've explored some critical topics from understanding the rising cost of essentials in healthcare to how precious metals can be a cornerstone of a strong financial strategy. Your engagement today shows the importance of taking proactive steps to safeguard your wealth.
Absolutely, John. Markets and economies will always shift, but the smartest investments are those that hold their value through all cycles. Precious metals have consistently proven to be a reliable foundation, offering security and stability when it matters most. Thank you again for joining us, and we look forward to continuing this conversation about protecting your financial future.
Couldn't agree more, Josh. And 24 hours after this live webinar, we will send you an email with a link to the recording and all of our past webinars. If you have a pen handy, you can contact us at 1-800-775-3504 to speak with one of our precious metal specialists. Again, that phone number is 1-800-775-3504. If you did ask a question on the webinar today, we'll be sure to get that to one of our precious metal specialists to reach out to you promptly during business hours. Thank you for being here.
Happy holidays, everybody.
Thank you.